So the bottom line to me is that all of these movements, these knockdowns, the suppression, the continuing suppression in the gold market or the volatility is being met with, thank you very much, we'll stand for delivery. And that's what we're seeing, whether it be tremendous silver deliveries in India or massive gold deliveries in China, or the rumor that now China is going to be accumulating copious amounts of silver. They're doing it in ways, in every way, whether it be exchange for physical, whether it be share redemptions out of the ETFs, whether it be direct deliveries out of COMEX or the LBMA. They're buying everything they can that is not nailed down. This is a much bigger game.
According to government and industry sources, India imported a record amount of silver in February, with imports surging 260% during the month. The country imported 2,295 metric tons of silver during the month, more than tripling the 637 tons recorded in January. India is the world's biggest silver consumer, and with imports of the gray metal now on pace for a 66% year-over-year increase, the demand could help catalyze the nascent silver breakout. As a leading authority in the precious metals industry, AndySchectman brings unparalleled expertise to the global silver and gold market discussion. In his observations, AndySchectman points out the rising demand for silver in China and India, with significant investment increases. He noted rumors indicating China's encouragement of silver investment due to challenges in obtaining immediate gold delivery. Silver prices remain well supported at elevated levels as robust demand continues to outweigh supply, creating a further drawdown in above-ground stocks, according to the latest research from the Silver Institute. Further underscoring the market, Schectman notices that the silver market is experiencing a global struggle between accumulators and those suppressing prices. He asserts that silver presents a highly undervalued investment opportunity with significant upside potential. Silver prices are poised at a 4-week low as investors await the Federal Reserve's policy update, with market sentiment swayed by the potential impact of a hawkish or less hawkish stance on silver's direction. The recent downturn in silver prices, influenced by a stronger US dollar and higher treasury yields, reflects a correction from previous highs. From Schectman's viewpoint, the gold market's unusual activity, especially the movement of gold bars in Hong Kong vaults, suggests exchange for physical (EFP) transactions following paper price drops. This trend underscores a growing global recognition of the value of physical precious metals amidst market instability. Now we present the clips of AndySchectman's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
It's one of these deals where, it's a big battle being fought. Half of the world is accumulating and the other half of the world doesn't want to let the price get out of hand. And because of what it really says, I think that the price of silver at 27.40 or 50 or whatever it is makes it as undervalued as any asset on the planet, period. And I really do mean that. It's as good of a place to look at in terms of an investment that offers unique upside potential, very, very minimal downside in an asset that is expanding tremendously in its uses and its applications, while at the same time diminishing in terms of its geologic footprint and in terms of above ground stockpiles. And you add into it the rumor that because gold for immediate delivery in China is becoming harder to get, that they have moved and prodded, they being the government, and telling their people who have an affinity for buying gold on a habitual basis to look to silver. The investment demand for silver in places like China and India, who continues to blow off the doors. Their numbers are up like 280% month over month. They bought almost 500 million ounces in the last 2.5 years. It's as undervalued of an asset as you will ever find. But when we also talk about gold, I want to bring something up kind of interesting that is lost in the pullback, in the smash down. And, when the market was smashed in gold last week or the Thursday before that, and, couple $1 billion worth of metal dumped onto the market like that in a matter of just a handful of minutes or less. Well, that's not the way trades are done. You don't maximize anything by dumping it into the thinnest part of the day when New York is closing, and as it's transitioning, to Asia, you're guaranteed the worst settlement, but you are guaranteed the greatest effect. It's a drive-by shooting. But when you look at the amount of COMEX approved gold bars in Hong Kong that are being delivered to Brinks, Hong Kong. Brinks has a deal with the COMEX, and it's through the OTC market, where over the counter, where the buyer and the seller can agree, negotiate where to take delivery of the product. And so what we've seen a tremendous amount of in one day last week, 475 gold kilo bars. Pardon me. That's what was received into the depository. 7,560 kilo bars were shipped out to Brinks Hong Kong. That's $571 million worth of gold, or 243,000 plus ounces. But the interesting thing about it is that the majority of all the physical movement through the Hong Kong vault is caused by EFP transactions, exchange for physical transactions. And basically what happens is that they knock down the paper price, they buy the real thing and stand for delivery in Hong Kong. These bars are then picked up and moved directly to the Shanghai Gold Exchange. So what we are seeing again is the awareness of the Chinese and the big players across the globe that when the price gets knocked down, they'll stand for delivery. They will immediately stand for delivery. They will buy contracts and stand for delivery and have them moved in kilo bars to Brinks, Hong Kong, which is then picked up by a truck and delivered right to the Shanghai Gold Exchange. The same thing is true with silver, and these exchange for physicals are much more difficult to see with transparency. So the bottom line to me is that all of these movements, these knockdowns, the suppression, the continuing suppression in the gold market, or the volatility, is being met with, thank you very much, we'll stand for delivery.
Regarding the allocation of funds, Schectman expressed concerns, particularly regarding aid to Ukraine and the potential fallout from supporting Russia's allies. He cautions against the perceived hypocrisy of selectively applied sanctions, which could strain global relationships with allies and adversaries. A Russian court sided with state-run lender VTB Bank in its efforts to recoup $439.5 million from JP Morgan Chase, which the American lender froze in U.S. accounts after the Ukraine invasion. According to a court order published Wednesday, the court ordered the seizure of funds in JP Morgan's Russian accounts and movable and immovable property, including the bank's stake in a Russian subsidiary. Pointing to notable examples, Schectman states countries such as Nigeria, South Africa, and Saudi Arabia are withdrawing their gold reserves from the United States. He sees this as indicative of diminishing trust in the dollar and an increasing recognition of the importance of physical assets, particularly in times of geopolitical uncertainty. Let's get back to the interview.
It's okay for us to give $200 billion to the Ukraine without any congressional oversight, mind you. But if they decide to give money to their ally, the charter member of BRICS, any aid that would ever benefit the Russian war machine, like ours isn't, then not only will their companies be sanctioned and their banks, but Beijing itself. And you can't go around the world when they view us as being hypocritical, first and foremost. And as the world reserve currency, you're supposed to remain neutral. And now you're beginning to see it spread even further quietly. I think it was Representative Mooney that asked the Fed, tell us all the countries that have been pulling gold out of the New York Fed. And for whatever reason, even under the Freedom of Information Act, they haven't provided it. I did just read an article where Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia have all withdrawn their gold reserves from the United States. And when you talk Saudi Arabia, well, that should resonate with people. What do you think this means? They understand that after all, gold has no counterparty risk. What are we leaving it in New York for when this is the country that is proven that if you do not line up their way, if you do not align ideologically, well, not only will you get your funds sanctioned, but in the case of Russia, now confiscated and used to give to the foe of the country they are fighting, the country that we are aiding, the country that we are providing billions of dollars in military aid to, and providing all sorts of, technical assistance and weaponry, but that's okay, but you can't do it. Well, that's pissed off a good portion of the world. There is no question about it. You're now beginning to see Pakistan, who has formally applied to BRICS. Now they're being threatened with sanctions if they decide to follow through and build the pipeline with Iran between the two countries for oil. And all of these things that are happening, the world is growing very tired of it. And this is the rallying cry, if you will, that is bringing everybody together. No question about it. And it isn't ending. And the worst part about it is the way that it comes across as being completely hypocritical. That many of the things that we are doing arguably are no worse than any of the things that we're sanctioning other countries for. Maybe they are actually worse. And, that's debatable. But the point of it is, it shouldn't be for us to decide. We should not be the judge and the jury and the hangman. And I think it will very quickly accelerate the ultimate end game of de-dollarization as these countries realize that, not only are they broke and insolvent, and in 5.5 years, all of their discretional income will have to be borrowed, or discretional spending, which includes military. They're a country that's completely and totally broke and is going around borrowing money they don't have to lend to other countries that they think is okay to lend to, but telling everyone else who they can and can't lend to. I mean, even Janet Yellen said for China to export their way out of this, their financial problems is just unacceptable to the global economy, with a weak yen. I mean, all of these things that we want to go around, our leaders, and impose are going to have consequences. And the question is, are they intended or unintended? That's debatable. Is this too stupid to be stupid? Is it planned? Or do we just have incompetence? But the worst possible thing you can do from a country that the world views as being hypocritical is to sanction in a holier-than-thou manner. Yeah, it's just, you can't make it up.
Global experts at Silver Institute predict silver may hit a high of $48 this year, as its market reacts to geopolitical issues and a year featuring several significant elections. They forecast that global silver demand will reach 1.2 billion ounces in 2024, the second highest level recorded. What do you think about the evolving trends in the silver market? And how do you see them impacting global financial dynamics in the coming months? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.